All right, guys, we got the big FOMC decision and press conference going live today. We got big tech earnings. We got the SPY, we got the Q, we got the NASDAQ up here. Probably throw at least a little bit of the Bitcoin chart up here. Hold on. Fix this a little bit here. Hold on. Is the NASDAQ right below me or right to the left of me? We're going to put Bitcoin's chart up. Well, but again, the FOMC decision, which is widely expected to be a pause today, goes live at 2 p.m. Eastern Standard Time. Live. We're going to stream the entire thing fully as it happens. Bitcoin's still, hovering around 90,000. This is Bitcoin right here. So we're pretty close to 90K. Let me fix this. Bitcoin, again, sitting pretty close to 90,000. 89.8 right now, 89.8. Squeeze this in here. And there we go. Again, we got the FOMC decision press conference. 2:30 p.m. is when the press conference actually starts. We did also get news recently. We get news recently that the Federal Reserve and Jerome Powell have not responded to the subpoena regarding the stuff going on with the Fed building. Yeah, we're back. Hey, good to be here. Will Jerome Powell have a hawkish or dovish tone today? Let me know. Looking to maybe find some chop today. Choppy price action. We'll see if we get it. Maybe looking for some chop. We are in a little trade right here if you want to take a look at it. Liquidating some of this as we head higher. I'll try to hold maybe the rest close to break even. Again, I'm worried about chop, but I think we've also broken down a lot. Okay. So, I want to see if we got popping back up here. We're going to stream the entire FOMC press conference live as it happens. Might add into this a little bit, see if we pop back up. Trading like basically a full NASDAQ contract here. We're in micros. Bitcoin back over 90,000 as we speak. Look at Bitcoin right here. Bitcoin is over 90K right now, over 90,000. Go here, take half off immediately. Just gonna lock this, popping high. Look at Bitcoin, guys. Bitcoin is flying, absolutely flying up as we speak here. We're gonna probably liquidate this. Look at Bitcoin, man. Wow. Again, FBI exec, Georgia stuff. Rubio says there might be U.S. presidents Ukraine talks in Abu Dhabi this weekend, but it won't be Witkoff or Kushner. And again, we did get news earlier that they haven't. Neuralink says we now have 21 participants enrolled in trials. Oh man, look at this trade. All right, I'm gonna cut more here. Wow. All right, so the Trump admin is said to be planning a rollout of Trump RX website on Friday. We also have news that Paramount is planning a move into short-form video. Yeah, look at the NASDAQ. Bitcoin, guys, up to 90,000+ here. Yeah, let's take a look at gold and maybe some other elements here. Gold, 53.33 or 53.33, yeah. All-time highs in gold are 53.45, so we're getting very close to all-time highs again in gold. Silver at 114 still. 117.70 is the all-time high in silver future. The silver, gold ripping up this morning. It does. And here's silver, gold, Bitcoin. Like this, so you can see it. There's Bitcoin, gold, silver, and we got the NASDAQ here. I'll get a timer up as well here. Looking at our poll, 57%. I think Jerome Powell is going to have a hawkish tone today. 57%. I'm going to get my timer up here. And again, the big stories of the day is what Jerome Powell's tone is like. Let me get my timer up and we'll talk about it. But the big story of the day is basically what is Jerome Powell's tone like. Will Jerome Powell have a hawkish or dovish tone today? Hawkish or dovish tone? Let me know. Ask the institutional buyers, home streamers know nothing. Yeah, maybe. No cap lock, please. Yeah. Calling some receipt printers for a bank today. Got there right when your last live ended and got done right when this one started. Hey, good, man. Hey, yeah, we're here. An FOMC decision today. Big thing, man. It should be some volatility. And after that, we got Bitcoin. Or no, I'm sorry. After that, we got Meta, Tesla, Microsoft earnings, IBM earnings after the closing bell today. So. Yeah, all good. But again, it should be an interesting day. FOMC decision at 2 p.m. The press conference at 2:30. So. Here's the NASDAQ on the day here. NASDAQ is broken down since the opening bell day, basically. Yeah, hit that live button next to the play button. Put it in 2x speed. Catch up to the stream. And we'll see what we get. Still sipping my coffee. All right, guys. Again, we got a little bit over an hour. Let's talk about some things. We're going to talk about the big story of the day. You know, remember, last FOMC decision, we cut interest rates 25 basis points. Now, today, it is highly likely, about 97% odds, that we're going to pause rates. We're not going to change rates today. It's also not likely that we're going to change rates, especially cut rates, until at least June is what they're looking like. So again, today we're probably going to pause. The interest in this context is going to pivot to what Jerome Powell actually says during the FOMC meeting. So during the FOMC meeting, when the press conference starts at 2:30, Jerome Powell is going to speak. He's going to talk about where he thinks the market's at, or not the market, where he thinks the economy's at, what the risks are moving forward, you know, all these different things. And then they're going to do a Q&A, and his answers to those are going to give a lot of context into what the Fed might potentially do this year. But again, as of now, most people are widely expecting a pause today, and really pauses up until June. Powell steps down in May, and so June's the next meeting after Powell steps down. And the logic here is that they're probably going to get somebody that's a lot more dovish. And as chairman and intern, we might have more rate cuts after May. And so June is when it started. So we also have U.S. Trade Rep Greer on meeting with Mexico's economy secretary. Says both sides recognize substantial progress in recent months and agreed to continue intensive engagement to address non-tariff barriers. So that's going on right now. It's a busy week, though. Not only that, again, Microsoft Meta earnings are going to be a big story after the closing bell. So after the closing bell, big story of the day is going to be Microsoft, Meta, Tesla earnings. So we will see what that looks like. Again, 54% as of now think we're going to pause today. Let me get my timer going here. Hold on. Wait, I need to get another one. I forgot to actually put a title in here. All right, so here's the FOMC decision. And we'll see what the NASDAQ wants to do. Again, we're looking at 160s. Bitcoin over 90,000, so I'm obviously going to be watching 90K on Bitcoin, which is right here. I think 90,000 makes sense to pay attention to on Bitcoin. You can kind of see it pulling back underneath me. NASDAQ is probably going to be flat, and then again, silver, gold, I'm watching for moves. But Microsoft, Meta, Tesla earnings should cause some volatility at the very least here today, heading into this Fed decision. At the very least, again, Trade Representative Greer is currently speaking. He said they agreed to begin formal discussions on possible structural and strategic reforms in the context of the first U.S.-MCA joint review. Talks on stricter rules of origin for key industrial goods, enhanced collaboration on critical minerals, and increased external trade policy alignment. Again, that's U.S. Trade Representative Greer. We're not supposed to get a tariff decision up until at least February 20th. February 20th. All right. Again, FOMC decision at 2 p.m. Eastern Standard Time. Yeah, Bitcoin keeps rejecting around 90,000. Yeah, my handwriting's not good, but to be fair, I'm also mousing it. If I really wanted my real handwriting to be neat, I would. I write too quickly for my actual handwriting to be neat, though. So, sorry, but I blame ADHD. Again, Bitcoin flushing back under 90,000 here. Flushing back under 90K. And again, the big talking points of today, Fed expected to hold rates, pause rates at 3.5 to 3.75 today after 3 straight cuts. They frame this as a pause to assess rather than necessarily the ending of the easing cycle. And so again, in the statement and presser focus, we can look at whether Powell is keeping an easy bias, which means more cuts, easing bias, like meaning dovish, more cuts possibly later this year is what that might potentially mean, or hints at a longer hold if growth and labor stay resilient and we continue to see strength in the labor market. That's a big question for this. Again, markets are currently right now pricing in 1 to 2 cuts later this year. Again, roughly June is what we're looking at. So hints to that are something to pay attention to. Yeah, so again, June or beyond is when we'll probably get our first rate cut this year. Look at the NASDAQ turn. Look at the S&P turn. Look at the Bitcoin chart turn down here. Again, what I think Powell's going to say today, and this is just my own personal subjective opinion, I think Powell is going to basically come in and say essentially that we cut rates 3 times the last 3 meetings. We cut rates 25, 25, 25, which if you guys remember paying attention to my FOMC streams, that's what I told you guys we'd probably do last year is 25, 25, 25. We had some argue, but again, 25, 25, 25 is the most reasonable thing, you know, looking back, and that's what we ended up doing. Now, we've cut rates 75 basis points, 0.75% in the last 3 meetings, and in the last FOMC minutes report that we got, they basically said that most people in the Fed agreed that we could pause rates for a period of time now and assess, right? This is what they said in the last FOMC minutes, which recaps the previous FOMC decision from December. So most people are looking back thinking it's time to assess where we're at now in terms of rates, where we're at now in terms of labor and jobs and GDP and all that stuff. But another story of the day is the Fed's independence versus the president's pressure. Powell is under political fire. There's a Department of Justice subpoena, and you know, they've been worried about firing for a period of time. But again, he is expected to reaffirm that policy won't follow the White House's wishes on faster cuts. The White House is pushing for earlier cuts, longer cuts, you know, more easing potential. Crypto and Bitcoin want that as well. But in general, if you want to see what he's going to look for, if he downplays shutdown and tariff risks, we are potentially heading into a shutdown. It's a little bit more hawkish, higher yields, pressure on golds, higher interest rate sentiment. If he leans on fiscal and political uncertainty and there's downside risk to the economy, then we might pivot to more dovish, more easing earlier than expected and stuff like that. But that's what this is. This is not the dot plot as well. The dot plot happens every other meeting. Every other meeting we get a dot plot update and a summary of economic projections that give us a little bit more outlook into the future. This is not that meeting. We're not getting a dot plot today. But it is still a relevant, important meeting that we're going to hear what he has to say regarding all this stuff. So that's where we're at now. And again, let me know what you guys think. Will Powell be hawkish or dovish? Looking at our poll again, pretty split. 53% think hawkish, 47% think dovish. I'm kind of somewhere in the middle, to be honest here. I'm not really expecting him to commit super heavily to either side. Like, I'm not really expecting him to commit super heavily to either side. I think that the reality of it is he's probably not going to commit to a path easily. He's probably not going to give too much outlook moving forward, and he's just going to have like a wait and see approach. And I think that makes the most sense as well, versus coming in super dovish or super hawkish. I think the labor data that we've seen recently, we got a couple reports. It's been kind of neutral. It hasn't been super strong. It hasn't been super weak, relatively speaking. And the data's been pretty neutral. So, again, we'll see what we get with this, but we'll see what we get. Again, I think he's going to be kind of flat. Trade of 8 really still down. Get gold up there, 53.29s. So gold's getting close to all-time highs. It tapped it earlier this morning. It's getting close. Silver's up there as well. Bitcoin's down. Again, NASDAQ is pretty flat over the last few minutes. We're moving. Do me a favor, hit that like button, hit the subscribe button. We appreciate it. No way we get new all-time highs until next halving, but I'll start buying Bitcoin again in the fall, probably. Yeah, I mean, we'll see what Bitcoin does. Bitcoin's been struggling to get over and hold over 80,000, 90,000. So we also have the European Central Bank Schnabel saying rates are in a good place, expected to remain at current levels for an extended period. And I'm assuming ours is going to say a similar thing. I don't know if they're going to say verbatim that, but I think ours are going to be pretty flat, neutral, non-committive, is what I'm thinking here. I don't think we're going to commit to big interest rate cuts, big rate hikes. I don't think, you got some people pushing rate hikes. I don't think that's going to happen either. So we'll see. But jobs market is cooked. The later data hasn't been the worst ever. I mean, this is all granted, we are heading into a government shutdown. And so like the recent data hasn't been as worse as it was maybe 6 months ago, 8 months ago, 7 months, 6 months ago. The data was a lot better, or the data's been a lot better now. It's not negative like it was. For a period of time, we were getting negative job growth heavily. Now, some of this was related to the shutdown, but we also had some big revisions in some of the economic reports by the Bureau of Labor Statistics over the past 8 months or so. We've had some big revisions. Some of them were not small at all. And so, those revisions didn't look good for a period of time. But again, we are seeing kind of strength now. Not strength, but we're not seeing super weak numbers like we did for a while. So the labor data that I'm seeing, it hasn't been as bad as it was. GDP growth has been pretty solid still. So GDP is still growing pretty fast as well. And so that kind of argues against, earlier cuts, longer cuts, more cuts essentially. And again, we will see what we get. We still got 50 minutes left until the Fed decision. It's at 2 p.m. Eastern Standard Time, 2 p.m. Yeah, so somebody's asking, why will the government shut down? Because as of now, the stuff that happened over the weekend with the other shooting is basically causing disagreements between the members. Now, we already passed some of the funding. So we already passed some of the funding. I think, you know, the Bureau of Economic Analysis is included in the ones that we're funding, so we'll still get some economic data even if the government shuts down. It's a partial shutdown. It would happen on Saturday. So as of Saturday, if they don't get a deal done, it's already passed the House, it needs to pass the Senate. But because of the stuff going on over the weekend with ICE and drama and all that different stuff, the left is basically saying that they're not going to pass that budget because of ICE funding being included in it. And so now at this point in time, unless they get a deal done in the nick of time, it's unlikely that it's likely that we're going to have a government shutdown as of Saturday, this upcoming Saturday. And so that's where we're looking now. It's likely that we're going to have a shutdown. Oh, should we go and get it? Should we go and get it? Oh. You're back already? Oh, thank you, baby. Why is this wet? All right, thank you. Yeah, but government shutdown coming probably Saturday. Powell speaks at 2:30 p.m. Eastern Standard Time, so we got some time. Yeah, it's at 1:10. Powell, the rate decision is at 2 p.m. The press conference for Powell is going to be at 2:30. All right, guys. Again, Canada, South Korea signed a memorandum of understanding intending to bring South Korea auto manufacturing and investment to Canada, the globe, and others. Let's see what we get. Again, the NASDAQ is pretty flat. We did break down in most markets at the opening bell. We had a pretty good pre-market where we opened up really green. There was a couple news announcements today that happened. Specifically, number one was H200 chips got import approval from China for a bunch of different companies for the NVIDIA H200 chips. So the chip sector had been benefiting a lot from this morning and opened up pretty green on the day. We corrected a lot at the opening bell, though, and into the morning. And so we did come right back down. And now the S&P is technically flat, although it did break all-time highs earlier in the day, over $7,000 for the S&P 500. It's now back down under 7,000. And actually, it's technically red on the day, but that news did benefit markets. We also had earnings season here. And so we have had earnings season here for everything. And yeah, that's basically where we're at now. We also had other news a couple days ago that NVIDIA is investing $2 billion into CoreWeave. And then the president spoke on, the new Trump accounts is what it's called. A couple minutes ago, we streamed that as well. What was the other big news from this morning? Slipping my head. Again, we had the president said a massive armada is heading towards Iran. He said it's moving quickly with great power, enthusiasm, and purpose. Time is running out, make a deal, essentially is what he said. And this caused oil this morning to spike, at least in pre-market for futures. It's kind of come back down, but oil still elevated on this news of a potential just a little bit of a threat there. So yeah, oil, just because of scarcity reasons, if the supply is altered from some of the stuff he's saying in the Middle East, the oil supply from the Middle East is the supply is altered. Supply and demand, oil went up because of this. And that's the big news today, but the NVIDIA chip news is good. Again, Meta, Microsoft, Tesla, IBM earnings after the closing bell, and the market's acting really, really flat. Amazon also laying off 16,000 workers. 16,000. Honestly, a lot of the time layoffs are bullish because better margins is the logic there. Sorry guys, I'm kind of eating this sandwich here. But yeah, Bitcoin broke over 90s. It hasn't been able to hold. The S&P is starting to get a little bit more legs here if we look at it. Let's see. S&P starting to get a little bit more legs. Here's the NASDAQ. Here's the S&P 500. So S&P 500 futures are actually over 7,000 as we speak. If we look at the actual S&P 500, it's not quite up there yet, but futures, the E-mini futures, up to over 7,000 at 7,003. Again, silver, close to all-time highs, but gold has been pushing up a lot more than silver has today. Gold is really getting, gold is $10 away from all-time highs right here. So just to put this into perspective, this is the gold all-time high right there. And so we're very close to this. We're very close to gold breaking all-time highs, and we'll see what happens. People stopped using Amazon because of double the cost of products. Came to the door. They finally got smart with DoorDash, Uber, and all those others. Yeah, I mean, I think Amazon blamed the layoffs, or at least a lot of people did, specifically on too many hirings in 2020 and beyond, right? So the economy hasn't really seen that reflected in weak jobs recently, but it's not over yet. And sometimes the data is not accurate either. So, like, sometimes the data we get is not the most accurate anyway. So we'll see. Yeah, we got the FOMC decision, 2 p.m. Eastern Standard Time, 2:30 press conference. Again, I'm curious to see what Powell's tone is like. Oh, I'm sorry. SPY's starting to push back up, though, so we are seeing some strength here. ETH is holding up well. John, you should stream longer during the day. It gives peasants like me something good to listen to. Yeah, I mean, maybe one day. Again, 5 counterparties take place in the 1.103 billion Fed repo operation. Elon's also saying the next generation of Neuralink cybernetic augment with 3 times capability will be ready later this year in an X post. So, again, remember, Tesla earnings today, Meta earnings today, Microsoft earnings today, IBM earnings today, all after 4 p.m. So all after the closing bell today, we get all this stuff. And yeah, let me know if you have any talking points. No, maybe means maybe. I'm not saying you're wrong. I don't know. That usually just means I don't know. We'll see what happens. I don't want to comment on, too much. And maybe's not a no. I got 100% win weight scalping chop 2 days. Your voice is soothing and calming for trading compared to yelling all the time. I would say I'm the calmest person ever right now. Definitely in the top 3 calmest people ever. Gold rush miners. Yeah, honestly, I'm interested in gold too today, but I think I'm going to wait to see what kind of volatility goes. I think the market wants dovish Powell. And I think anything that Powell says that might contribute more to a dovish tone is going to make the market go up, generally. If it contributes to a hawkish, restrictive, tone, if he says inflation is still elevated, if he talks a lot about inflation risks and stuff like that, that means that's a restrictive tone, because inflation and rate cuts are inverse to each other. Essentially, the Federal Reserve cuts interest rates if the economy needs stimulating, right? Like cutting interest rates is stimulating the economy. Bringing interest rates down allows business to expand and hire more people, and people spend more, and all these different things, stimulating the economy. But the problem is that if that happens too much in a greater way, especially if we're talking money printing like quantitative easing, which is deeper stimulus, more desperate stimulus. If he talks about that today, like earlier QE than expected, then that is very dovish as well. But again, the consequence of QE, the consequence of a low interest rate environment for too long can be inflation. And so if he's worried about inflation, it basically means he doesn't want to cut interest rates. He doesn't want to stimulate the economy as much because he's worried about the spikes potentially we get to inflation. And vice versa. If he were, the other end of that, the other side of that would be if Powell comes in and steps in and says, hey, there's risk to the labor market. There's risk to the economy in that regard. Labor market's looking weak. Jobs are looking weak. Hiring is looking weak. And so maybe we'll need to, cut interest rates a little bit earlier this year than expected. It's not going to be today. Again, as of now, if you take a look at yields, and number one, you can watch yields to see what interest rate sentiment is short term. So if you want to know how to see what immediate interest rate sentiment is, you can watch where yields go during all this stuff, right? Yields currently over the last 5 days, if you want to take a look at it, yields over the last 5 days or last few days, currently at 4.25%, 4.25%, but you can kind of see what they've done since the 26th. They've gone up a little bit since the 26th. Here's the 26th day starting right around here. And we have had a move up in yields, which means what? It means a higher interest rate sentiment. You can also look at bonds if you know what you're looking for with bonds. Bond prices go up as yields go down. And so if we have like a really dovish Powell, bonds are going to go up. Bond prices are going to go up. Yields are going to decrease because yields and interest rates follow each other, and a lower interest rate sentiment means lower yields, so forth and so on. But bond prices and yields inverse each other. So if you see bond prices increase, that means potentially lower interest rate sentiment is what the market is interpreting. And so that's always a way you can do it. But again, you could look at the Fed watch tool here. Here's the CME watch tool. And again, I don't think this has changed. Oh, at this point, yeah, it's 99.4% likely we're going to pause rates today. So at the very least, most of the market is interpreting today as a pause, no interest rate cut. Only currently a 0.6% chance of an interest rate cut during today's decision. So again, 0.6% chance of an interest rate cut before today's decision. So we got 40 minutes left until the interest rate decision. We got a little bit over an hour left before the actual press conference. But as of now, again, very, very likely we pause rates today. And anytime, we get a really obvious outcome, like a pause today, attention pivots to what Powell says. He's going to do a press conference opening statement. We're going to read that at 2 p.m. He's going to go a little bit more into detail at that at 2:30, and we're going to stream the entire press conference. We're going to stream Powell speaking and all that stuff. But he's going to do an opening statement today. He's going to go a little bit deeper into the statement that we get at 2 p.m. And then after that statement, they're going to do a Q&A where analysts, economists, journalists ask him questions around potential future outlook regarding quantitative easing or QT, balance sheet, which is balance sheet related, inflation worries, job worries, rate paths, and more. And so that's what's on the deck today. And yeah, we'll see what happens. But 2 p.m. Eastern Standard Time. We got 40 minutes. If the economy is doing so good like they say, why don't they raise rates? Raising rates is usually a response to incredibly elevated inflation, right? And what I mean by incredibly elevated is like, again, I give this history at least once in FOMC stream, but I think it's important history to understand. Incredibly elevated inflation, you can use 2022, 2023 as an example. In 2020, the economy and the labor market was dire. It was struggling. We had lockdowns. We had all these different things affecting market supply chain problems from what was going on in 2020. And so we brought rates to zero. We or almost zero. We printed a bunch of money with quantitative easing. And QE, again, is just the Fed creating online money and then using that online money to buy up bonds and other assets with it, expanding their balance sheet. It keeps interest rates low, stimulates the economy, but it's a more desperate thing because it can cause inflation. And not only that, but again, we had supply problems. We had stimulus checks getting sent out. We had, interest rates at almost zero. We had quantitative easing, money printing. We had all these different things that caused inflation. And so by 2022, inflation was high, 9+%, almost 10% inflation with CPI price. CPI, consumer price index. And so during that period of time, the Fed started raising. They raised rates like 400 or 500 basis points, and then they paused them there for a year straight. Essentially is what they did to try to combat that 8, 9, 10% inflation that we had. And it worked. Inflation slowed. Now, you could argue inflation slowed because supply chains got better. The stimulus checks spent, and we already saw the increase from that. Whatever you want to argue, inflation slowed from. But inflation did slow. It was 8 or 9%. It's, 2.7, 2.8% now, 5 or 6 years later. But again, the Fed will raise rates in other periods of time, but one of their reasons for raising rates is super high inflation, and that was kind of a long-winded way of saying, I don't know if there's as much of an argument for raising rates right now, just because inflation is, the last inflation readings we've got are 2.8, 2.7%, and so if inflation was 5, 6%, I'd be on the bandwagon of raising rates, obviously, but we're not really there yet. And there's a balancing act. If you raise rates too much and keep them there too high at restrictive levels, the economy suffers from it and the labor market suffers. If you keep them too low for too long and you do a bunch of money printing, inflation is the outcome. So you got to balance it. So you're saying there's a chance? Yeah, we're not raising rates today. If we raise rates today, I would assume it's like a retaliation from a subpoena or something. But again, I it's not even in the odds today. It's not even in the odds. They realize no one in the U.S. can afford kids. Yeah, I mean, a lot of people are unhappy now because of the inflation that we saw back then. And 8, 9, 10% inflation's not a small amount. People get mad about 2 or 3% inflation. 8, 9%. The exponential effect of that is rough. Rough. And most people are still unhappy because of that. Like, food and energy prices have stabilized a little bit, but prices don't really go down unless we enter a deep recession, or worse, right? So we're stuck with those prices. The best we can hope for is stabilized inflation for a few years. And, whether we get that is another question mark here. But who else thinks we should raise rates today? I mean, I don't personally. Again, I don't think inflation's anywhere high enough to raise rates. I think the market, one of the things you'd see, and again, I think a hawkish Powell today will make markets go down. If Powell's hawkish today, I think markets are dropping. But if we raised rates, which is obviously one of the more hawkish things you can do, market would really react negatively. I don't think anybody's going to see that as optimism. People might see it as panic in inflation terms. So, do you believe in the reported inflation rate, or do you think it's worse? I don't know, Todd. Maybe it's not the most accurate thing, but I think people look at prices now and they say, oh, prices are high from what I'm used to. Inflation must be really bad right now. The way you need to look at it is prices are a lot higher than they used to be. Inflation must have been really bad a few years ago, because again, a lot of people are looking at it expecting prices to literally drop. And again, inflation doesn't go down usually, it slows down. So the rate at which it increases might slow from 8 or 9% like it was in 2022 to 2.7 or 2.8% now, but we're still stuck with those prices, and in most of those sectors, they're not going to drop. They're not going to go back down. Again, I showed this graph at least once just because it's important for people to understand. But once the prices go up, we're kind of stuck with it. Here's the last 20 years. The last 20 years of prices. Right, and what do you see? You see one time, we see one time basically 20 years ago where prices literally went down. Here's the zero level where prices literally went down across the board. Right, and they didn't stay there, and this was 2008 financial disaster, so they didn't really stay there. The best we could do is hope for a slowdown. Here's 2022 peak right here. We've slowed down, from 9% to whatever we're at now, 2.7, 2.8%. But, the price increases that we saw from this big spike here, we're stuck with them, as of now at least, unless we go into a recession. And maybe some people would prefer that, just rip the Band-Aid off, enter a recession, let prices literally go down. But even still, they're not going to stay down. Yeah, I mean, I don't know. I think Powell's had some dovish moments over the past 6 months. Is it the most dovish he's ever been? No, but we've had some dovish moments over the last 6 months. The admin need a weaker dollar. They would never admit it. Yeah, I mean, strong dollar's not always good if you want stimulus, you know. And speaking of the dollar here, 96.5. The other question is, when do we stopped reducing our balance sheet, which is quantitative tightening. And the Feds, they don't sell off directly, direct QT. They mostly just let them expire, mature, and run off their balance sheet. So another question mark today for the FOMC decision is, what does the Fed do in that context? Like, are they going to start quantitative easing sometime soon? Quantitative easing is a more dovish thing, and I think it depends on their logic. I don't think so necessarily. I think they might keep their balance sheet the same size for a period of time, especially if they're pausing rates and not doing other dovish things like cutting rates again. But maybe in terms of balance, I guess they could. But, yeah. Again, looking at our poll, 56% are hawkish. And again, let me know for the people commenting in the chat, are you hawkish or dovish today? 56% are hawkish, 44% are dovish. Let me know if you're hawkish or dovish today. Yeah, QE starts fourth quarter. Somebody's saying it starts in June. I see hawks out there. Dove, hawk. Sideways until he leaves. Neutral. Silver and gold under pressure. Hawk Tua. Dove. Bull trap. Hawk. No. Yeah, we'll see. We'll see. Mostly hawkish people in chat, so do y'all think we should raise rates is the question. I'm curious to see, do y'all genuinely think we should raise rates, or do y'all would just rather no cuts and hawkish sentiment from the Fed and Jerome Powell? Just noise. I don't care either way. If you're in crypto, you probably want easing, right? Like Bitcoin reacts well to easing news. So Hand's going to start unloading treasuries. Maybe. Yeah. I think I heard news about this morning. Dollar index has had the worst year in a long time. Specifically, if you look at it, here's the Dixie, right? This is the year. It started off at 110. It's basically at 96. So it's lost some value for sure. You put a weekly chart up, though, you understand, like, look, the Dixie fluctuates, but it generally, you know, I don't know. There's some periods, like, here's the .com crash. Like, look at those percentages in the .com crash. Like, those are not small, from 121 down to 70 from 2008. And so the dollar index doesn't go straight up. It fluctuates. It fluctuates. And really, you got to look at it long term. But yeah. At this point, Bitcoin people should hope for bearish. Who wouldn't want to pick up a whole coin for 50? Yeah. Yeah, I'm looking at yields ahead of this report just today specifically. Yields are mostly higher. So basically, yields are pricing in a little bit more hawkish of a Powell. If we take a look at rate odd markets here. So here's an interesting poll here. Wait, this is what's interesting. Okay, so I'm seeing odds markets price in. What will Jerome Powell say during the January press conference? People are betting he says inflation 40 plus times. That's at 82%. 40 times? I have to look at what the average is that he says during the press conference. I don't know if he says that much, man. Does he? Again, there's an 11% chance that Jerome Powell is federally charged by June 30th. $40 times, bro? That seems elevated, you know? You know I've been paying attention to too much economics when I say that seems elevated, you know? We also have a 77% likelihood of a government shutdown. I'm going to look at Kalshi markets a little bit more. See what they've got to say about things. 40 times, bro. 40 times? Again, odds of a government shutdown by Saturday, 75% likelihood. I hope they get a deal done in the nick of time, though. Look, here's Kashi. 75% likelihood of a government shutdown. Depends on how long he's going to talk for. It might be a short speech, keeping everything on the same. That's why my money's on. Maybe. How I usually play the FOMC, I'll do the opposite of the fast, aggressive, false move for the mean reversion. Yeah, I don't mind that. Great channel. Thank you, Robert. Yeah, I think Powell's going to be pretty neutral today. I don't think he's going to be super committed to any rate path. I think he's going to basically be data dependent. But again, yields are pricing in a little bit more hawkish Powell than expected, at least today. We see yields go up from 4.23 to 4.257%. They're not huge moves, but again, yields and interest rate sentiment follows each other. So higher interest rate sentiment, higher yields, lower interest rate sentiment, lower yields. So a little bit higher interest rate sentiment here. The NASDAQ is also not moving. And again, we have big tech earnings today. The big tech coming out today with earnings. We got the Fed decision in about 25 minutes, 24 minutes here. And we'll see what we get. Netflix had a red day today for sure. It's on the 84s. Hal's not going to say good morning because it's not morning time. Again, Bitcoin at 89,000 here. 89K. No rate cut or whatever keeps the rates the same, but be very hawkish on the schedule. Credit base back up and running. Wonder when Trump will take an about face because the midterms are coming up. S&P 7,000 plus by February 1st. S&P broke 7,000 this morning. Here's SPX. This is the actual S&P 500. It hit 7,228 this morning at the opening bell. So the S&P 500 already broke 7K this morning. So the new all-time high in the S&P is 7,002 something. So NASDAQ really flat, really sideways ahead of this report. 23 minutes left. He's going to start unloading bonds soon. I'm actually not wearing blue here. This is not blue, despite what it looks like. This is actually gray. I don't know why my camera changes the color of things. This is a gray shirt. A friend told me he's getting next week off. He's subcontracted by the military. Yeah, I mean, again, the government shuts down, he will. Depending on how long the government shut down. But he'll probably at least get a few days off. Do you think Trump and Powell coordinate rises and drops in the market? No, I think they just like each other. Again, Powell has had a lot of opportunity to shock markets and take the market different directions. And he's almost always pretty neutral. Like, he very rarely gives big, like big shocks in interest rate decisions. Almost always the interest rate decision is most of the time expected. And you always got these people that bet on these wild outcomes. Like, oh, I know a rate hike's not even in the cards today, but we're going to raise rates today. Or, oh, we're going to cut rates today. And most of the time they're just trying to hype you up so you watch their stream. The reality of it is he's been pretty neutral here. He's been pretty neutral. He's been pretty, realistically, he's been pretty predictable in terms of rate paths. Like, Powell's been predictable. An example of it is, again, in September of last year, I told you guys I thought Powell would do 25, 25, 25. And that's exactly what he did. And I knew that in September. Why? Because that's the most predictable outcome. You know? And so if I'm able to predict what he's going to do like that, he's moving in a predictable way. And I think if you're going to try to swing markets in any one big direction, you're not going to be that predictable. You're going to do something that's got low odds that you can milk a little bit. And that's just not what he's doing. Who's going to replace him? I can't remember. I think it was the Kevins for a while, but I think he even said today he's keeping Kevin Hassett the same. So I don't think it's going to be Kevin Hassett. Maybe Warsh. Who's the other new one? Maybe Ryder, I think is the new guy. He's talking about Ryder, so we'll see what happens there. But yeah. And you want predictable? I mean, predictable definitely causes less shocks to financial markets, but we'll see. NVIDIA just said Congress must reauthorize National Quantum Initiative. It's such a big day here. We got 20 minutes, guys. 20 minutes. We got about 1,000 people here already. 20 minutes left. Let's see what we get. Again, we got the FOMC rate decision, 2 p.m. Yeah, he doesn't like to rock the boat. He's also pretty neutral and stuff like this as well. All right, guys. FOMC decision coming pretty soon here. Again, give me your last minute predictions. Do you guys think we're going to do hawkish or dovish Powell today? And if you do think it's going to go a different way, which way do you think it's going to affect markets? Again, the big talking points today. Fed is expected to keep rates at 3.5 to 3.75. Markets currently price in 1 to 2 cuts. Powell will likely be data dependent. Maybe a story is independence versus the president's pressure in the Federal Reserve. Powell's under political fire with a subpoena and worries about firing. He's expected to reaffirm that policy won't follow the White House's wishes. More dovish tone might keep gold and silver higher too. So we're watching those. Gold and silver have been running. Here's silver up here, but it's down a little bit this morning. But they've been up, breaking all-time highs as well. S&P broke all-time highs. A lot of markets reacted negatively to the opening bell today, though. And Bitcoin has popped over 90,000 a couple different times, but it has not held down there. So we'll see, chat. We'll see. Again, Bitcoin struggled. Will Bitcoin break over 90K anytime soon? Hold. Question. Again, the Fed's almost certainly going to hold rates today, though. Anybody that tells you we're not going to hold rates, probably just trying to shock you or make you watch their stream. It's almost certain we're going to cut rates today. So just be ready for that. Yeah, we got 18 minutes left. 18 minutes. Hit the like button next to the play button. Put it in 2x speed here, chat. I appreciate the love. I'm looking at dovish, hawkish, dove, neutral. Stay neutral. Roller coaster. Jerome too late Powell. Sideways until Powell leaves. Crypto bros hate Powell. They want easing, you know. You got the whole kitchen to want to buy stocks? Hey, listen, I'm here. You're welcome. Send me some food. That's all I'm saying. Baked potato? Hey. Should Powell ease? When will we do another question? When do you guys think we're going to start quantitative easing? Positive surprise, dovish likely. You think dovish Powell? I mean, I think the labor market has shown more. It's still weak, but it's shown more progress than we saw 6 months ago. 6 months ago, things were looking bleak. We had big revisions to labor. Worries about the labor market, negative numbers in labor reports, unemployment upticking, and a lot of fears regarding the labor market. And so, we did see that heavily 6 months ago. May and June last year got revised down big for jobs. Now, the recent reports have not been nearly as bad. I wouldn't say they're good numbers, because good numbers are like 200K plus jobs in the monthly reports. But they've been a lot better than they were. And so maybe this might pivot Powell away from going ultra dove today. I think he's going to be pretty neutral. Inflation has also been surprisingly low as well. when a lot of people were worried about stagflation. Inflation showed up at 2.7, 2.8% after popping over 3% for a while. And so, you know, he doesn't have a lot of reasons to be super hawkish either necessarily. And again, maybe he's going to be neutral. I don't know. Again, we're at 7,000 right now, 7,000 on the S&P 500. Here's the NASDAQ. NASDAQ, again, down, surprisingly, since the opening bell at about 8:30, 9:30 this morning. Silver also went technically red on the day. Again, gold is down there. Now, remember, the FOMC press conference is going to be at 2:30. The actual report drops at 2. So the report drops on the rate decision at 2. So we'll see what that looks like. But that's where we are right now. I agree regarding the data. The ISM manufacturing data tells a different story, though. Yeah, you might be right. Again, you might be right. The data could be wrong. And again, the government data sometimes is just not accurate either. And so sometimes we don't really have the most accurate reports here by the government. The ADP data, though, which is usually a little bit more accurate, I would say, than the government's data because it's a payroll processor, that data has shown some gains in jobs. It's not negative like it was for a couple months. It was negative for a while. We had like negative 32,000 jobs on one of them, negative 14K, I think, on one of them. So we had negative job numbers for ADP for a while. Those numbers have pivoted back to positive now. And so, again, I don't think the labor market is necessarily in a good place. I think it's better than it was 3 months ago. But again, time will tell. We'll see. Again, the big question is going to be what Powell says. We'll get a little bit of info on his tone during this report as well. So we will get a little bit of info on the tone during this report. How much? I don't know. Again, 12 minutes left until the actual FOMC decision. No rate cut today. Yeah, I mean, no, I don't think no rate cut today is going to cause a huge dump. Something else they might say in the report might cause a huge dump. But again, no rate cut today is like 99.4% likely. So it's already, everybody already thinks we're not going to cut rates. Nobody thinks we're going to cut rates. Nobody thinks we're going to raise rates. And if they do, I would really not watch them. You know, again, anybody telling you we're going to raise rates today has no idea what they're talking about. And maybe I'll eat my words. Maybe we do raise rates. Highly unlikely. Highly unlikely. A rate cut would be a little bit more likely, but that's not happening either. Oh, good luck, Donna, or whatever. But yeah, today it's already pretty freaking likely we're going to pause interest rates. The question is, what is Jerome Powell's tone like? Like, what is his tone like? You know, is he hawkish or dovish? What that means, you know, that's the big important question today is what is Jerome Powell's tone like during this meeting? And again, I don't know. I don't know what it's going to be like. I think he's going to be pretty neutral today, is my guess. It's the first Fed meeting of the year, though. So we are here. We're going to read this statement live as it happens. Statement should show up right here. So again, we're going to read it as it happens. But again, he's going to pause rates. Question is, what does that look like? Rate cut, almost not certain to not happen. A rate hike is never going to happen. I'm gonna be like, sell everything and just walk out. What if he wears a red tie? What color will his tie be? I'm gonna go with purple, violet, almost like a light purple. Yeah, the 6-7 guy's getting booted out of here, bro. All right, guys, FOMC decision. Don't count out a cut. I mean, a cut is 0.4% likely, though. I'm not saying you should never, you know, take the dog in betting, but that's not happening, you know, especially with the subpoena. It's not happening. Gonna wear a GameStop tie? I'd support that. All right, guys, 10 minutes. John, do you have a spoon for your words? The question is, does anybody really think we're going to raise rates today? Of course not. You know, of course we're not raising. I mean, that's just not even on the cards today. There's something called the wisdom of the crowd. So when 99.4% of people are betting that something's not going to happen, it's probably not going to freaking happen. Average nut times he says inflation is 40 plus. Okay, that makes sense. I didn't realize he said inflation that much, but yeah, betting odds are pricing in whether he says inflation 40 times or more. I don't know. Again, the FOMC decision is in 8 minutes. Japan just held rates steady a week ago. Powell just posted on your MySpace he's going to cut 25. Well, it ain't Powell. That might be Trump speaking, you know. At least 15 times? Well, yeah, 15 times is going to happen. %, of the people are saying that it's not going to happen. Yeah, 100% of people are saying rate hike's not going to happen. Yeah, rate hike's never going to freaking happen. Maybe we cut. It's pretty unlikely. Look, here's the odds. Again, since we have 7 minutes left, let's talk about it. Here are the odds for this. All right. Again, 97 or 99 point. See, it a second ago was 99. Did it just pivot back? Hold on. Let me see. Where's the other one? Yeah. Look, 99.4% of people are betting on a cut today. 0.6% on a pause. It doesn't look like we're going to raise rates or cut rates until, here's July. It looks like we're going to cut rates at least 25 basis points. A majority of people are betting, but there's still a 40% chance that we pause all the way up until June. So again, about 47%, or they're a little bit higher. About 61% of people think we're going to cut rates at least 25 basis points by June. But even still, the percentages are not so up there to where it's looking like a statistical certainty. Yeah, Powell's going to pause today, guys. I mean, again, anybody telling you he's going to do anything different doesn't know what they're talking about. The question is, what is his tone like? What is his tone like? Does he fear inflation more? If he fears inflation more, he might keep rates higher for longer. If he fears labor weakness more, he might cut interest rates earlier. It's still not going to be today, but he might cut them, you know, in a few meetings, as opposed to June, which is when after he's out as chair. He steps down as chair in May of this year, and so the next meeting is June, and that's why the probabilities spike after May. You know, that's why the bet of at least a 25 basis point cut by June is higher, but it's still not certain. Yeah, I don't know if he's gonna pee off the president. The president's almost certainly gonna let him finish his tone, his thing up until, if he steps out in May, it's no point in kicking him out now. Just let him finish. But again, we got 6 minutes left. 6 minutes. Yeah, here we go. We got 1600 here. We got 6 minutes left. Again, Bitcoin under 90,000. Gold Back down to 5,300, and 5,300 seems to be a support level for gold. Silver, $111 an ounce. NASDAQ has fallen down since the opening bell as well here, guys. And we got 5 minutes. Again, bull or bear right now? Bull or bear? I did a poll. 56% think hawkish tone. 44% think dovish tone. Are you bullish or bearish on this meeting? Again, put bull or bear in chat if you're bullish. Let me know. Again, I see a lot of bulls, mostly bullish traders. I don't expect a lot of movement now, to be honest. Yeah, maybe. I mean, look, we got 4.5 minutes. See what we get. Yeah, we're going to cover this as soon as it drops, so stick around. But, yeah, we'll cover it. All right, guys. 4 minutes left exactly. Bear, bear, pig, bear, bear, bear. The bears woke up when I said it was all bulls. The first, like, 7 or 8 were bullish. The rest woke up. Again, we are waiting here for Jerome Powell. Again, waiting here for Jerome Powell. We'll see what happens. NASDAQ started to creep up a little bit ahead of this. Bitcoin's still down on the day, though. Bears come in February. Yeah, baby. All right, guys, here we go. 3.5 minutes here, chat. 3.5 minutes. Let's see what we get. Again, the big story is the FOMC decision here. The FOMC decision is big. And so we got 3 minutes. Here we go. 3 minutes. Any last minute predictions from this is not blue, guys. This is a gray shirt. It's a gray shirt. What color will Powell's tie be? We won't know until 2:30. If it clears his throat, it is bearish. Yeah. Again, the statement is going to be the next important thing here. And the statement drops in 2.5 minutes. Again, the actual press conference is going to be at 2:30 Eastern Standard Time. But the statement drops with the rate decision and more in 2 minutes. So it's time. Again, 2 minutes left here. Chat, 2 minutes left. Do we crash from this report? I don't necessarily think so. I think we're going to be pretty neutral in everything. I think Powell's tone's going to be neutral. I think his statement's going to be relatively neutral. 2 minutes left. 2 minutes. I think his statement's going to be neutral. I think his tone's going to be neutral. I think we're not doing anything with rates. We're going to pause rates. And I think we're just going to wait and see what data looks like moving forward now. That's my biggest guess here. We got 2 minutes left, but that's my biggest guess. Neutral Powell. I look emo today, bro. Dude, I don't have the emo, you know. My hair, I have curly hair. It can't be emo hair, you know. Too curly for that. All right, guys. Hey, we got a minute and a half. A minute and a half. Polymarket. Polymarket's pricing in a 75% chance of a shutdown. But again, we're pausing rates today. Again, we got a minute and 20 seconds, guys. A minute and 20 seconds. Hit the live button next to the play button. Put it in 2x speed. Catch up to the channel. Again, the FOMC decision is going to be at 2 p.m. today. The press conference is at 2:30. We have a little bit over a minute left. Again, put it in 2x speed and hit the live button. You'll be right on time for this. All right, right on time. I'm telling you, we're going to pause rates. In a minute, you're going to see we're going to announce a pause in interest rates, but we're going to digest the statement immediately. Everybody saying bullish? Yeah, I think most people are bullish now. Again, here we go. 45 seconds. 40 seconds, really. It's time, guys. Be ready. Again, we'll see how the market reacts. 30 seconds. $45 seconds. 20 seconds. All right, we got about 15 seconds left. Here we go. Let's watch the market. Here's the NASDAQ 100. Gold, silver, NASDAQ 100, Bitcoin on the right. And here's the report coming in about 5 seconds. Here we go. And here's the report right now. Okay, I'm pretty sure they paused interest rates. Yeah, we paused. Not a shock. I mean, that was what was expected. The pause in interest rates. Here's the statement right here. I'm going to go ahead and start reading it. This statement's probably more important than the decision, so stick around. It says, available indicators suggest that economic activity has been expanding at a solid pace. Job gains have remained low, and the unemployment rate has shown some signs of stabilization. Inflation remains elevated. Committee seeks to achieve maximum employment and inflation at the rate of 2%. Uncertainty about the economic outlook remains elevated. The committee is attentive to the risks to both sides of its dual mandate, meaning inflation and jobs. In support of its goals, they decided to maintain the target range at 3.5% to 3.75%. As expected, a pause in interest rates. In assessing appropriate sets of monetary policy, they'll continue to monitor the implications of incoming information. But again, available indicators suggest that economic activity has been expanding at a solid pace. Job gains have remained low, and unemployment has shown some signs of stabilization. Inflation is elevated. Again, they seek to achieve maximum employment and certain. They kept rates basically paused. Bitcoin is actually up a little bit at 89.6. Now this seems like a little bit more hawkish, maybe a tad bit more hawkish of a statement here. A tad bit more hawkish of a statement. Again, pause in interest rates. The actual rate decision is coming at 2:30 p.m. Eastern Standard Time today, or the actual press conference is coming at 2:30. But again, here is the summarized look. Again, available indicators suggest economic activity has been expanding. Job gains have stayed low. Unemployment has shown signs of stabilization. Inflation remains somewhat elevated. This line might be a little bit more hawkish. Inflation remains elevated. Basically what he said was job gains. The job market was good. Inflation still risky. He said essentially uncertainty about the economic outlook remains elevated. Again, uncertainty around the economic outlook remains elevated. The NASDAQ's starting to turn down. So is Bitcoin here. Look at Bitcoin drop. It's at 89.2s right now. So Bitcoin's coming down. NASDAQ's coming down. And again, this looks a little bit more hawkish to me. It looks a little bit more hawkish. Why is it more hawkish? Well, he said inflation's risk. He said the labor market's okay. Inflation remains risky. Uncertainty about economic outlooks remains elevated. So maybe that balances out the inflation elevated part. But the NASDAQ is reacting negatively to this report. NASDAQ is reacting negatively to this report. So let me know what you guys think here. But again, we also have the accompanying press conference going live soon. We got the accompanying press conference going live soon. I'm going to put it in sub-only mode. All right, let me change that to anytime. Subscribe, hit the notification bell. We cover all the stuff live. I told you we would pause today, and we paused. The big question mark today, guys, is not going to be what this rate decision is. The statement seemed a little unwilling to give out outlook. They didn't really say anything about quantitative easing. But it seemed maybe a little bit more hawkish to me. A little bit more hawkish. Again, available indicators. Economic activity has been expanding at a solid pace. Job gains have remained low. Unemployment rate has shown some signs of stabilization. Again, I told you guys this before this, that the labor market looked a little bit better. Job gains are still low, but stabilization in the labor market. It's better than it was 6 months ago, basically. The committee is attentive to the risk to both sides of its dual mandate. So I would say it's mostly neutral. And the NASDAQ didn't really react in a huge way to this either. The big question mark is going to be, what does Powell say during the press conference? The big question is, what does Powell say during the press conference? And again, we're going to stream the entire press conference live. The big question is going to be, what does he say live? And I don't know. Inflation's so elevated, even though stabilized. Well, he said the labor market is stabilized. The unemployment rate has shown some signs of stabilization. He didn't really say inflation. What they said regarding inflation was that inflation remains somewhat elevated. That's the hawkish thing for me. Inflation remains elevated. He did say job gains remain low to balance it, maybe. But again, inflation still elevated ain't good. You know, you don't want elevated inflation. You want low inflation. You know, if you want rate cuts, you definitely want low inflation. If you want easing, you want low inflation. So elevated inflation. And again, he'll say more of this in his opening statement during the press conference. So he'll probably repeat this and then go into a little bit more detail during the opening statements of the press conference. So again, we'll see. But that's basically what it is. He'll basically repeat this, go into opening statements, all that good stuff. And so again, we'll see what this looks like. But what he says during the press conference is critical now because we paused interest rates as expected. The statement was kind of neutral. And if we're looking at what we're going to do for rate outlook, that's the next question. Let me put the news up on screen here regarding the FOMC statement. We'll put this up on screen, but yeah, that's basically what we did. We paused interest rates. We will be streaming the entire press conference live as it happens. Let me reduce this. Again, Moran and Waller called for a 25 basis point rate cut. So the vote was split at 10-1. Moran and Waller called for a 25 basis point cut. Again, we didn't really raise rates a ton. We left rates unchanged. We had two dissenters. Moran and Waller called for a 25 basis point cut. So let me lower this a little bit. Try to squeeze this into here. That's good. What kind of song is this? Again, rates were paused today. Rates kept unchanged. Vote split 10-1. Moran and Waller called for a 25 basis point cut. Yeah, let me get a timer up. Han just made Emo John for me, so whoever said emo, you know, I'll give you a quick little preview of it. Looks just like me too, honestly. A lot of the time AI isn't accurate. I'm gonna show my wife this. Should I go with this style? Should I pivot from normal style to this guy? Let me know right now. Let me know his name in chat. You know, let me know his name. Yeah. All right, but yeah, rates left unchanged. Let me do another timer for the actual press conference here. Let me do a timer, and again, this is going to be in about 22 minutes. All right, so here's the timer. Dark John, yeah. Listen, I don't know what kind of song I'm listening to right now. All right, guys. Hey, 23 minutes left. 23 minutes. I'm from Louisiana, bro. I live in Texas, and I like Texas. Texas is cool, but I'm a Louisianian at heart. Yeah, Powell's going to do the speech in 22 minutes again. Again, the Fed kept rates unchanged. Kept rates where they were. Paused rates. Again, the statement again is as follows. Available indicators suggest economic activity has been expanding at a solid pace. Job gains remain low and unemployment rate has shown some signs of stabilization. Inflation remains elevated. Because of all this stuff, they basically decided to pause rates. So Moran and Christopher Waller, who preferred to lower the target range for the federal funds rate by a 0.25 percentage point at this meeting. So again, Moran, Christopher Waller both pushed for a 25 cut. The rest kept them the same. So that's basically where we are now. Yeah, I'm from Houston. Or I live in Houston. 23 minutes though, guys. 23 minutes. Let's see what we get. Come on. Again, the actual press conference is at 2:30 p.m. in 20 minutes. We got a timer up. You can see it. This is going to be the most crucial aspect of today. This is going to be the most crucial aspect of today. What Powell's tone is like, generally speaking, again, I said this before I told you guys we'd pause. I think we're going to be completely neutral today in everything. I think we're going to pause rates, and we did. I think Powell's going to have a neutral tone. He's going to be unwilling to commit. I think there's risk to both sides. A lot of people have argued stagflation over the past 6 months, and I can't really create a good argument against it. You know, we've seen elevated inflation. We've seen weak labor data. That can sometimes precede a recession. And, you know, a lot of people are going to call what we're in right now stagflation. And I think when you're in that situation, if you raise rates too much, it hurts the labor market. If you lower rates too much, it causes inflation risks. And so I think the Federal Reserve today, because of that, are going to be incredibly neutral, unwilling to commit to big rates, big rate moves. And I think they're just going to be flat. They're going to be neutral. So, yeah. Yeah, go Tigers. Yes, sir. Hey, what's up, Nando? Doing good, man. What's up, Anna? Kevin. Oh, dude. Almost fell for the fake pump. Sometimes the first move is a wrong move. Again, because... Okay. Nothing shocked anybody here. It's all relative to whether we get shocks. Nothing really was shocked here. Like, we didn't get any shocking moves. You know, Moran and Waller voting for a 25 basis point cut. Everybody else voted for a pause. That's not a shock either. Moran's the newest guy appointed to the Fed by the president, so he's going to kind of sing his tune a little bit and want lower interest rates. I'm not agreeing or disagreeing. I'm just saying that's what's going to go on. Same thing with Waller. Everybody else wanted a pause. Even in the last FOMC minutes report, most people widely agreed that we were not going to cut rates this meeting and that we were going to leave rates unchanged for a period of time to assess things. And that's what this meeting is about, is assessing where we're at. We had the government shutdown. We might be headed towards another one. I'm curious to see whether Powell says anything regarding that and what he thinks the outcome of that might be in terms of economic data being muted during the shutdown again. We already had some... We're still getting delayed data from the previous shutdown that ended in November. It's now almost the end of January. We're still getting delayed data. This Friday, we have delayed PPI inflation data for December because it was delayed because of the shutdown. And so I'm curious to see what Powell says in that regard as well. But again, I think Powell's going to be pretty freaking neutral. I don't think he's going to commit to anything. I think they're going to ask him different things, but he's going to say, hey, I don't know. We're going to wait. We're going to wait is basically what he's going to say. I think he's going to say inflation is elevated, and he did in the statement already. I think he's going to say the labor market's showing signs of improvement, but there's still risks, and that there's risk to both sides of the mandate, as he said in the statement already. And essentially, we're just going to kind of see what he's got to say now regarding everything else. But that's where we're at now. Market didn't move because everything was basically flat. Pause, as expected. And honestly, I don't even need to look at the statement. When I see the market response, like, I know what we did based off of the market response. I know when I see the FOMC decision come out, and the market doesn't move at all, I know we did what was widely expected. Because if we didn't, if we raise rates, market's crashing. If we cut rates, market's probably going to push up a lot in optimism. So, yeah, market didn't move. That basically means we came in as expected for everything in the Fed meeting. Now, the big thing, again, people's minds are pivoting to the press conference now. Again, the press conference is now going to be the most important thing. And, yeah, we'll see what we get. We'll see what we get. All right, let me get this up and ready. Pull the press conference up. Get ready. We have 17 minutes. 17 minutes until the FOMC press conference. Let me find a good way to put this on the screen. Here, give me 1 second. I'm going to kind of mess with this and make sure we really get a good picture on the screen. I'm going to have to stick myself in the corner or something, though. I think that's pretty clean. Over here. right, I think that's pretty clean. I mean, I still got a lot of work to fix it, but let me clean this up a little bit. Again, FOMC decisions going live very soon. We're just waiting on it to start now. Again, here's Bitcoin underneath me here. Make a timer up over here. We put like a chart or two. If I can squeeze this. Buy right here on the bottom. Make this a little bit larger. Again, press conference starts 2:30 p.m. Eastern Standard Time. It's a mess right now. Hold on. Right, there's silver. Silver, gold. Again, we have about 13 minutes left, 14 minutes left. Again, give me your predictions, guys. Hawkish or dovish Powell today? I'm going to go with neutral. I'm going to take the cheating answer and just go with neutral here. Here's silver and gold right there. And here's the SPY. You can make the press conference larger too if you want, but I'll probably put like the NASDAQ up right here. See what the dollar index has done. So the dollar index, here, let me fix this. Yeah. You should have choose gold going crazy at 50.97. Is gold down that much already? It was at 5,300s. No, gold is at 53.30. So gold is actually pushing pretty close to highs. And it did break highs for a little while earlier. The gold new highs 53.60s. So gold pushing up. Silver's up there 113s as well here. Bye. Buy's not moving. Again, Waller, Moran, dissented. They wanted 25. Big tech earnings after this too. Hawkish? Yeah, we'll see. You bullish on Meta and Tesla earnings? I don't know, man. I don't know how those Mag 7 earnings are going to affect things. I think that's just kind of... We got so many things going on today. It's kind of wild. So we'll see. But I'll just do it. I think that's a little bit clean. All right, guys, here we go. All right, guys. I don't know what happened to my camera, bro. I can't even find my camera here, dude. Let me see if I can find it. Locate. Again, 10 minutes left, guys. 10 minutes left. Stocks seem to have rebounded slightly from this. So we're almost here. Tesla will not say much about vehicles. Yeah, I mean, Tesla's story is going to be interesting. Again, we'll see what we say. But here's the SPY right here. Again, there's gold. Put the NASDAQ up on the top right here. Here's the NQ. All right, so again, this meeting is supposed to start in 19 minutes here. 19 minutes. I know I can zoom in here. Use this. A little bit cleaner. I want to see what the NASDAQ does over everything here. Maybe Bitcoin as well, though. Silver rules the metals. Honestly, silver and gold have been wild here. I got in silver, luckily, not that long ago. So I did get into some good stuff with silver not that long ago, but it's just wildly up. Silver's just been pushing. Gold has been doing really well this morning specifically, but silver's been outperforming it over the last few weeks, especially with all the supply worries and stuff going on there. Again, what color will Powell's tie be? Let me know in chat right now. Purple is what I'm going with. I'm going to go with purple. I know it's the safe response, but I'm going to go with purple. See, blue, red. I think if you showed up at a red tie market, it would be chaotic here, to be honest. Here's my camera, bro. I finally got my camera up and running. I don't know what I did, but I'm gonna stick myself in the corner here. Again, NASDAQ hasn't really reacted much to it. Dark blue mauve. Is that how you say it? Is it mauve? Mauve? Is it Maeve? Like the girl from Mobland? You know, let me know what it is. I don't know. I don't know how to pronounce that word. What's up, Faye? Yeah, 2:30 Eastern Standard Time. That's in 7 minutes. All right, guys. Hey, we got 7 minutes. A good time to buy silver? I don't know. Is it? Silver's at what? 112s right now? 111s here? Again, Bitcoin. Is it time to buy Bitcoin, guys? I don't hate where Bitcoin is at, to be honest. I think if Bitcoin gets some wheels, it can really run. I don't necessarily hate buying Bitcoin. What do you guys think about Bitcoin, silver, gold? Is it time to buy any of those assets? Yeah, we have 6 minutes, roughly. Yeah, I just finished my blend like a week ago. Again, rates kept unchanged. Vote is 10-1. Moran and Waller called for 25 basis point cut. So that's where we're at right now. Again, we're heading into the actual press conference here, guys. Heading into the press conference. We'll see what we get today. It's time. The big day. First FOMC meeting of the year today. So it's a big day. And we're here for it, guys. Again, we got 6 minutes left. 6 minutes. 5 minutes, really. And we did a poll here. What's another poll I could do ahead of this meeting? 2,000 votes. 58% are hawkish. 42% are dovish. So most people are leaning towards hawk. Will Bitcoin hit 150,000 this year? Maybe. I mean, I think 150,000 is much, you know, sometimes crypto, and I'm in Bitcoin, I want it to go up, right? But sometimes they put out these wild predictions. All right, let's get ready here, guys. I'm actually going to switch my headphones out to different headphones. You're going to be able to hear it no matter what. Nasdaq's still pretty sideways here. We got 3.5 minutes until Powell speaks. All right, here we go. Getting ready. 4 minutes left. 4 minutes, guys. The last bull run you're going to see this year. Billion by 2030. SPY will hit 800. Bitcoin will hit 500. Bitcoin's going sub 70. If gold can do 2 trillion a day, why can't Bitcoin the same year? Kathy Woods predicts 1 million. Yeah, but I mean, all these, like, some of these Bitcoin, like, look, I respect Kathy Woods. She definitely got more money than I do, right? But sometimes it's just confirmation bias in a post. Like, oh, Bitcoin, like, we got a month left of the year. Bitcoin's at 100, 110 or whatever. You know, oh, Bitcoin's going to hit 250,000 by the end of this year. Is it really? Is it really going to go up? You know, $150,000 in a month? I don't necessarily think so. It might run big. I don't know if it's going to run that big. Anyways, we got 3 minutes left. I know that's not the cool thing for me to say. I want it to go up. I'm bullish on it long term. I understand the finite nature. I'm bullish in it, but make reasonable predictions. Don't just say what people want to hear. Yeah, gold's been flying up. Silver's been flying up. Here's Bitcoin. Again, gold has made big moves today. All right, guys. 2.5 minutes left. That's actually the song, Faye. It's not Bruce and Rosie. That's the song. Okay, let's see what yields did from this report. That's one of the curious things. I think yields are a little elevated. I think yields are pricing at a slightly more hawkish Fed. Just like I said, look at yields. So yields are up to 4.27%. They are elevated from the Fed decision. So again, I thought it was a little bit more hawkish than expected, to be honest. And I think yields are pricing that kind of dynamic in as well here. So. All right, guys, here we go. All right, I got both of them on here. I'm also going to make sure the volume's very high, so forgive me. I'm going to mute the music and turn the music off now, and I'm going to turn the volume for the press conference up substantially here, just so you guys can really hear. Again, we have about 1.5 minutes left. They should be starting any time now. And I'm going to turn the volume up a lot so you can actually hear it well. So we pride ourselves on having the loudest FOMC stream in the books here, so you're welcome. But gotta make sure we're ready here. Both of them are still on this kind of pause page. All right, guys, waiting here. We got about 1 minute left. 1 minute. Yeah, here's gold. Gold's up to 53.24. This is gold right here. This is the gold futures. Again, the FOMC press conference is starting now. 30 minutes or 30 seconds. All right, guys, here we go. We got 20 seconds left. 20 seconds. Nasdaq's starting to turn a little bit here. We're live. Make sure volume's up all the way. Yes, sir. Live. Nothing started yet here, guys. We're still waiting on this decision here. It should be starting in about 10 seconds. We'll give it a second. Okay. Right, here we go. Waiting on them to start.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The U.S. economy expanded at a solid pace last year and is coming into 2026 on a firm footing. While job gains have remained low, the unemployment rate has shown some signs of stabilization, and inflation remains somewhat elevated. In support of our goals, today the Federal Open Market Committee decided to leave our policy rate unchanged. Having lowered our policy rate by 75 basis points over the course of our previous 3 meetings, we see the current stance of monetary policy as appropriate to promote progress toward both our maximum employment and 2% inflation goals. I will have more to say about monetary policy after briefly reviewing economic developments. Available indicators suggest that economic activity has been expanding at a solid pace. Consumer spending has been resilient, and business fixed investment has continued to expand. In contrast, activity in the housing sector has remained weak. The temporary shutdown of the federal government likely weighed on economic activity last quarter, but these effects should be reversed as the reopening boosts growth this quarter. In the labor market, indicators suggest that conditions may be stabilizing after a period of gradual softening. The unemployment rate was 4.4% in December and has changed little in recent months. Job gains have remained low. Total non-farm payrolls declined at an average pace of 22,000 per month over the last 3 months. Excluding government employment, private payrolls rose at an average pace of 29,000 per month. A good part of the slowing in the pace of job growth over the past year reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. Other indicators, including openings, layoffs, hiring, and nominal wage growth, show little change in recent months. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index indicate that total PCE prices rose 2.9% over the 12 months ending in December, and that excluding the volatile food and energy categories, core PCE prices rose 3.0%. These elevated readings largely reflect inflation in the goods sector, which has been boosted by the effects of tariffs. In contrast, disinflation appears to be continuing in the services sector. Near-term measures of inflation expectations have declined from last year's peaks, as reflected in both market and survey-based measures. Most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 3.5% to 3.75%. Since last September, we have lowered our policy rate 75 basis points, or 0.75 of a percentage point, bringing it within a range of plausible estimates of neutral. This normalization of our policy stance should help stabilize the labor market while allowing inflation to resume its downward trend toward 2%, once the effects of tariff increases have passed through. We are well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks. Monetary policy is not on a preset course, and we will make our decisions on a meeting-by-meeting basis. To conclude, the Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We at the Fed will continue to do our jobs with objectivity, integrity, and a deep commitment to serve the American people. Thank you. I look forward to your questions.
Hi, Chris Rugaber at Associated Press. Thank you. I wanted to ask that, you attended the Supreme Court hearing last week on the Lisa Cook case, and Treasury Secretary Scott Bessent criticized that as political. Can you say why you attended and what you would say in response to the Secretary's criticism?
So let me start with, I don't respond to comments by other officials, whoever they may be. It's just not appropriate to do that. I will tell you why I attended. I would say that that case is perhaps the most important legal case in the Fed's 113-year history. And as I thought about it, I thought it might be hard to explain why I didn't attend. In addition, Paul Volcker went to a Supreme Court case famously in, I guess, 1985 or so. So it's precedented, and I thought it was an appropriate thing, and I did it.
Great. And then just quickly follow on the job market. You mentioned last month that the household survey might be distorted, and you also mentioned the potential for overcounting jobs, which would suggest that we're still in a negative hiring pace. So do you see the drop in the unemployment rate as solid? And what's the basis for saying that things have stabilized? Thank you.
So, yeah, really two questions. One is, so we're getting through the distortions in the data from the shutdown. However big they were in November, they're smaller in December. So we're getting to a place where they're no longer material. They're still there, but it's a tweak here and there. The reason why we changed the statement, let me pull it out, was simply, it used to say that judges that downside risks to employment rose in recent months. So we saw, data coming in which suggests some signs of stabilization. I wouldn't go too far with that, but some signs of stabilization. There are also some signs of continued cooling. And so we thought that was no longer an accurate description of the data. In addition, the outlook for economic activity has clearly improved since the last meeting, and that should matter for labor demand and for employment over time. So for those two reasons, we thought we would take that language out of the statement.
Nick Timros, The Wall Street Journal. Chair Powell, you've generally avoided engaging with political controversies directly, and the video statement on January 11th was a departure. What made this different, and are you concerned it could draw the institution further into political debates? So
today I'm simply going to refer you to the statement that I made on January 11. I'm not going to expand on it or repeat it. So I'm just not going to. This is really about the press conference and the economy and what we did today, and some ancillary areas, but I'm not going to be getting into that.
Can you say whether the Fed has responded to the subpoenas?
I have nothing for you on that today.
Mike.
Michael McKee from Bloomberg Radio TV. Have you made a decision on whether you would remain as a governor of the Federal Reserve? And if so, would you tell us what it is? And if not, when might we anticipate a decision?
No, and I really, once again, have nothing for you on that today. That either.
Why would you want to leave it all under the circumstances?
Again, I don't want to get into this. It's not something there's a time and place for these questions, but not something I'm going to be getting into today. Thank you.
Thank you. Claire Jones, Financial Times. Thanks a lot for taking my questions. In another one that might, lead to a similar answer. We've seen quite big movements in the dollar over recent days. What do you think is driving the US currency lower? And have you been at all concerned just by the extent of the volatility we've seen this week? Thank you.
So, Claire, as you probably know, we don't comment on the dollar. Really, the administration, especially the Treasury Department, has the job of oversight over the currency and exchange rates and all that. We don't comment on that. It's not our role. So I have nothing for you.
But, I mean, what's your view on the market movements? I mean, what do you think behind them? Is it asset managers diversifying? Is it?
Yeah, I just don't. We don't talk about the dollar. We don't talk about what moves it around. It's just not appropriate for us to do so. Really, the Treasury Department has that. It's their role, their bailiwick, and we stay off it. We do monetary policy and some other things, but we don't comment on the dollar. Sorry.
Neil.
Hi, Chair Powell. Neil Irwin with Axios. Obviously, no SEP in this meeting, but in light of the slight firming up of the language around growth in the labor market in the statement, should we assume that the timeline for any further rate cuts is pushed back compared to what people might have thought in December?
Well, first of all, if you look at the incoming data since the last meeting, clear improvement in the outlook for growth. The data have come in, and sentiment, the Beige Book, everything comes in suggesting that this year starts off on a solid footing for growth. Inflation performed about as expected, and as I mentioned, some of the labor market data came in suggesting we're evidence of stabilization. So it's overall a stronger forecast, really, if that's your question. I'm not sure I answered your question.
But in terms of timing or pacing of any additional easing?
So we haven't made, what we'd say about this was that after this meeting, after the 3 recent rate cuts, we're well positioned to address the risks that we face on both sides of our dual mandate, and we'll continue to make our decisions meeting by meeting based on the incoming data, the implications for and the outlook and the balance of risks. Haven't made any decisions about future meetings, but the economy is growing at a solid pace. The unemployment rate has been broadly stable, and inflation remains somewhat elevated. So we'll be looking to our goal variables and letting the data light the way for us.
Steve.
Steve Leisman, CNBC, and sticking with questions you might answer, thank you. You had previously, I believe, described the current policy rate being at the higher end of neutral. And if you look at the longer run, the SEP and the longer run rate, 16 of 19 officials are actually below there on their long run. Is the Fed still in a process of bringing it down towards a middle range of neutral? And what would it take to get there?
So the count I did was that 4 of the 19 were at or above that. Maybe I missed by 1, but I thought it was 4. And if you look at the dealer survey, it was 10 out of 58 where we're at or above. So you're right. It's the higher end of the range. What we say is it's within the range of plausible estimates. This is the higher end of that range, but so for some people they think it's neutral. I think, and many of my colleagues think, it's hard to look at the incoming data and say that policy's significantly restrictive at this time. It may be sort of loosely neutral, or it may be somewhat restrictive. It's in the eye of the beholder, and of course no one knows with any precision. Is that, if you had a follow-up?
I get what you're saying, but some officials have described the Fed being in a mode of bringing it down eventually over time. Are you still in that mode, or is this a place to hang out?
Yeah, no, I would say if you look at the SEP from December, most people had additional normalization. But at the same time, we've done a lot of the process of normalizing. A good piece of it is done with 75 basis points, and before that, 100. It's 175 basis points we've cut since we began cutting in September of 2024. So you've moved now to, Fed funds is running just a little below 3.65%. So you've moved a good way, and we think we're well positioned here to watch how the economy performs, look at the data. We're not making decisions about future meetings, but we do think we're well positioned after those 3 cuts to let the data speak to us.
Amira.
Thank you, Chair Powell. Mara Mokwe from Bloomberg News. To what extent did the committee discuss the possibility of cutting at this meeting or in March? And how are you all thinking about the conditions that would merit another rate cut? Is there broad agreement on the committee about what it would take?
So there was broad support on the committee for holding today. Broad, I would say, including among non-voters. So that's where that was. Of course, some people did want to cut and dissented, but committee pretty broadly for holding today. We're not trying to articulate a test for when to next cut or whether to cut at the next meeting. What we're saying is we're well positioned as we make decisions meeting by meeting, looking at the incoming data, evolving outlook, and all that. And we're in a position where we still have some tension between employment and inflation, but it's less than it was. I think that the upside risks to inflation and the downside risks to inflation have probably both diminished a bit. So, we'll be looking at that. It's about how you weigh the risks to the two goals and how big those, and quantify them. And so there are different views on the committee, and, we'll find our way forward as the data evolve.
Thank you, Mr. Chairman. Edward Lawrence from Fox Business. Has the effects of tariffs already moved through the economy on prices?
A lot of it has. So basically, there are many different estimates, and they're all highly uncertain. But most of the overrun in goods prices is from tariffs. And that's actually good news, because if it weren't from tariffs, it might mean it's from demand, and that's a harder problem to solve. We do think tariffs are likely to move through and be a one-time price increase. So most of the overshoot, if you were to take that out, inflation, core PCE inflation is running just a bit above 2%, ex the effects of tariffs on goods. And the other good news is, if you look away from goods and look at services, you do see ongoing disinflation in all the categories of services. So that's a healthy development. So that's what's going on. The expectation is that we will see the effects of tariffs flowing through goods prices, peaking, and then starting to come down, assuming there are no new major tariff increases that are begun. And that's what we expect to see over the course of this year. If we see that, that would be something that tells us that we can loosen policy. Also, if we see something that suggests that the labor market is not stabilizing, that in fact the downside risks reemerge, or the data just get worse, we'd have to look at both of those. We have a two-sided mandate.
If I could, if President Trump does pick a new Fed chairman before May, what does that look like? How would you work with that person, and what does that transition period look like?
I don't have anything for you on that. That will depend on Congress's actions and things I can't speculate on.
Howard Schneider with Reuters. Thank you for taking our questions. Given the changes in the statement and all you've said so far, is it fair to describe risks to both sides of the Band-Aid as roughly balanced right now? And is the next move necessarily down?
I'd say that the upside risks to inflation and the downside risks to employment have diminished, but they still exist. So there's still some tension between the mandates. Are they fully in balance? Hard to say. And we think our policy's in a good place. I've just discussed reasons why we might change our policy, and we'll just have to see how the data lead us.
I'm wondering, you a minute ago you said you felt expectations were consistent with your mandate. That the 2 and the 10-year break-evens have moved quite notably in the last couple of weeks, I believe. Is there any concern on that front?
I mean, I recently looked at all of the both survey and market-based short-term inflation expectations have come way down. They were in a good place at the beginning of last year. They spiked around Liberation Day, and now they've fully retraced in the last few months. So that's very comforting. And the longer-term inflation expectations have remained in places that are very consistent with 2% inflation over time. So expectations have been solid, and they reflect confidence in the return to 2% inflation.
Andrew.
Apologies if this is a little bit repetitive, but in the past you've said that the reason you cut rates was that the risk to the labor market was greater than the risk to the inflation side. Is that still true?
We haven't made, you're right, we saw the labor market weakening and we acted. And I think that was the appropriate thing to do. We will always act to address what we see as the economy moving away from our goals. Risks to both of the variables are a little less. I think the upside risk to inflation, again, a little bit less, and the downside risk to employment, a little less. I just would say that. I'm not making a judgment about how, one of them is more at risk than the other, just that the risks to both of them have diminished.
Okay, thanks. BIS wrote a paper last summer which concluded that global investors were hedging their dollar exposures in ways that previously they hadn't because of policy uncertainty. Do you agree with BIS?
We really don't see much at all about that whole story. There's just not a lot of data that suggests that there's much to that.
Thanks.
Anna Swanson with the New York Times. Can you talk more about what you would need to see in the labor market to conclude it's time to resume easing? Do you need to see further deterioration in the labor market, or would it be enough for inflation to soften?
So we'll always be looking at both things. And so there could be combinations, infinite numbers of combinations that would cause us to want to move. Certainly, a weakening labor market would be an argument for loosening. But what's happening with inflation? If inflation were at the same time getting worse, you just have a very difficult situation there. So we'll be looking at both. Clearly, a weakening labor market calls for cutting. A stronger labor market says that the rates are in a good place. We'll have to be making similar judgments, too, on inflation, though.
And if inflation does pick back up and the labor market doesn't show further signs of deterioration, is there a chance that you could raise rates rather than simply remaining on hold? What would you need to see to consider hiking?
We don't take things off the table, but it isn't anybody's base case right now, anybody's base case, that the next move will be a rate hike. But, ultimately we'll do what we think is the right thing. But that's not where people's expectations are right now.
Victoria.
Hi, Victoria Guida with Politico. I wanted to ask, you've talked in the past about concerns about the U.S. fiscal trajectory, and we've seen in the Japanese bond market a lot of turmoil recently, in part due to concerns over their fiscal and long-term economic outlook. So do you worry that the U.S. could at some point find itself in a similar situation to Japan, whether for fiscal or demographic reasons?
Over time, you've seen that U.S. rates have remained they haven't moved a lot really for a while, but they haven't moved a lot because of what's been happening in Japan. So it's more of an over time thing. The U.S. federal budget deficit is, uncontroversially on an unsustainable path. The level of debt is not unsustainable. It's very much sustainable, but the path is unsustainable. And the sooner we work on it, the better. But right now we're running a very large deficit at essentially full employment, and so the fiscal picture needs to be addressed, and it's not really being addressed. So that's important. I'm not in any way connecting it to some sort of near-term market event, but ultimately it's something we'll have to deal with, and that in the end game, that's where you wind up, is in some kind of a difficult thing. But that's not where we are. It's not where Japan is either. But it's certainly not where we are right now.
Does it reduce the effect of your rate cuts that longer-term rates have overall not really budged that much?
I wouldn't say that. The thing is, technically, higher longer-term rates means less accommodative financial conditions. But remember, many things move longer-term rates. It's not mostly what happens on the short end. There can be effects of longer-term rates from our moving our policy around, but it's much more assessments of the fiscal path and fiscal policies and risks and things like that move the 10-year around. You can look back at and find periods where we've been very actively moving the policy rate over the course of a year, and over the course of that year, the 10-year is exactly where it started. So there's not a tight link between 10-year rates and the overnight rate.
Elizabeth.
Thanks so much, Elizabeth Schulze with ABC News. Republican Senator Tom Tillis, who sits on the Senate Banking Committee, said he will block any Fed nominee, including the chair, until this investigation into you is resolved. Do you support this move by the senator, and what conversations have you had with the senator?
I've got nothing for you on that.
More broadly, what would happen to American households if the Federal Reserve loses its ability to operate independent from politics?
So really, the point of independence is not to protect policymakers or anything like that. It just is that every advanced economy democracy in the world has come around to this common practice. It's just an institutional arrangement that has served the people well, and that is to have a separation between to not have direct elected official control over the setting of monetary policy. And the reason is that monetary policy can be used, through an election cycle to affect the economy in a way that will be politically worthwhile. So this isn't, I'm not talking about the U.S. context, this is every advanced economy democracy of any size. So it's a good practice. It's pretty much everywhere among countries that look at all like the United States. And I think if you lose that, first of all, it would be hard to restore the credibility of the institution if people lose their faith that we're making decisions, only on the basis of our assessment of what's best for everyone, for the wide public, rather than trying to benefit one group or another. If you lose that, it's going to be hard to retain it. And we haven't lost it. I don't believe we will. I certainly hope we won't. But it's very important, and the reason it's important is that it's enabled central banks generally not to be perfect, but to serve the public well.
You're confident it can maintain that independence at this point?
Yes. I mean, I'm strongly committed to that, and so are my colleagues.
Archie.
Thanks. Archie Hall from The Economist. On that sort of stabilization of the labor market question, how much do you see the weakening we saw over the past 6 months, year, as a kind of data mirage around immigration and the government shutdown and so on that's now resolved? Or how much have we seen a kind of real underlying firming up in the state of the labor market, do you think?
Well, part of it is, to your point, part of it just is that labor supply, growth in labor supply has come to essentially a halt from a fairly fast clip of growth over the last couple of years, driven by immigration, and then the halt being driven by a very sudden stop in immigration. So many outcomes were possible with that. Supply came way down. It turns out that demand for labor also came down a very similar amount, maybe just a little bit more, which is why the unemployment rate has gone up. So I don't know whether that's a coincidence or not, but that's what's happened with that part. But if you look at other things, like, for example, just to pick a couple, the Conference Board's measure of job availability that came out, I don't know, was it yesterday or today? But, it shows, it's a survey showing that workers feel like job availability it's a very low reading. It's just one reading, but it's an indication of softening. People, part-time for economic reasons, which is a category within the broader U6 category measure, has moved up significantly. So there are lots of, and I could go on and on, there are lots of little places that suggest that the labor market has softened. But you're right, part of payroll job softening is that both the supply and demand for labor has come down. Growth in those two have come down. So that makes it a difficult time to read the labor market. So imagine they both came down a lot to the point where there is no job growth. Is that full employment? In a sense, it is. If demand and supply are in balance, that you could say that's full employment. At the same time, do we really feel like that's a maximum employment economy? It's very challenging and quite unusual situation.
Thanks. And one more on growth and the kind of strong growth outlook, or strengthening growth outlook you're now seeing. How much of that is the fiscal stimulus we're seeing from the beautiful bill, the tax cuts, and all of that?
So you're seeing it already. You don't have much of the fiscal. I think the outlook, you're right. It's financial conditions, and it's fiscal policy for 26. But you've got strong consumption that's been happening before financial conditions have been supportive, but before the fiscal effects really are shown. So essentially, the economy has once again surprised us with its strength, not for the first time. And consumer spending, although it's uneven across income categories, but consumer spending overall numbers are good, and we're benefiting from the AI build out of data centers. That's another thing we're benefiting from, but. The economy overall, the growth is on a solid footing. It looks like, and it's not just those things. It's just the consumer is filling out surveys that sound really negative and then spending. So there's been a disconnect for some time between downbeat surveys and reasonably good spending data.
Thanks, Chair Powell. Christine Romans from NBC News. You talked about how consumer spending is uneven. The president calls inflation defeated and solved. The FOMC says it's a somewhat elevated inflation. But you talked about those customer survey or those consumer sentiment surveys and public opinion polls that show that most families say the cost of living is still issue number one. What is the conversation around the table with your colleagues about how wealthier consumers seem to be driving so much of the economy, and why so many families still feel like they just can't make ends meet after 5 years of rising prices? What is that discussion like?
So a couple things. One, there's something to it in that we know that higher income households that tend to own real estate and tend to own stocks, securities, and those assets have been going up in value, and increases in wealth do support spending over time. So, and that's clearly a part of the story. We also know that for some time now, for a year or more, we've been hearing from retailers, for example, that serve lower income customers, whether it be food or the big box stores or anything. They're saying the same thing, which is our consumers are looking to economize. They're trading down from brands, and they're buying less, and it's changing their buying habits and that kind of thing. So we're seeing that, and that is a reality of what we're seeing. They're still consuming, but they're feeling it in a different way. I would say more broadly on affordability, we have a vast network through the reserve banks and also through the Board of Governors, where we talk to small and large businesses and households, and so we do hear a lot about affordability, and we take that very seriously, and we take it to heart, because one of our jobs is price stability, and so the best thing we can do for people who are feeling that squeeze is to keep inflation under control, and frankly, to finish the job of getting inflation back down to 2%.
You mentioned the AI build-out as being a positive for economic growth this year. I wonder, as you look at the weakest year last year for job creation of a non-recession year since like 2003, are you concerned about AI maybe supplanting more entry-level work and entry-level jobs, and how does that play into what you're watching about the labor market?
So everyone, of course, is watching AI and the deployment and, trying to understand exactly what's happening. And there's a wide range of possibilities. It's hard to say. And of course, anyone who uses it is amazed at what it can accomplish, right? So every technological wave will eliminate some jobs and create other jobs. And it's always been the case. If you look back, wave after wave after wave, there will be some disruption, but ultimately technology increases productivity, which is the basis for rising wages. And it may not all happen immediately, but over time, it's what enables incomes to rise over time, is rising productivity. So and we always ask, well, this is going to be different, is it going to be different? And we don't know. And we may, in any case, see in the short term jobs that are being eliminated by the capabilities of AI. We may see that. We just don't know what the overall effect is going to be. So how to think about it in macroeconomic terms, it's very hard. We can look at the aggregate data. We can analyze, for example, there is some connection, it appears, between the low hiring rate for recent college grads and AI, but it's not the main or only driver. You hear large companies, though, many of them saying that they either won't be hiring for some time, or that they're hiring less, or that they're laying people off, and they tend to refer to AI when they do that. So we're all watching and learning, and it could certainly have pretty significant effects on the economy, the workforce, and our society. We don't really have the tools to address the concerns that may arise, but we have a lot of people who focus on analyzing it and try to understand what the macroeconomic implications are, which is our job.
Beyi. Thank you, Chair Powell. Beyi from AFP News Agency. You mentioned earlier that on inflation, the broad expectation was for a one-time price increase and then for inflation to come down. And I was wondering, is your expectation still for inflation to start cooling in the second half of 2026? And if you could elaborate how far we are from target currently. Thank you.
So how far we are from target is, as I mentioned in my opening remarks, we had 3.0% core PCE inflation over the 12 months ending in December, and that's pretty much what we had the year before. So on net, no progress, but the story behind that is modestly positive in that most of the overshoot was in goods prices, which we think is related to tariffs, and ultimately we think those will not result in inflation as opposed to a one-time price increase. Okay, so that's where it is. In terms of, you asked, no one thinks they will, ex ante understand really clearly, precisely when this will happen. But there's an expectation that sometime in the middle quarters of the year, we'll see tariff inflation topping out. So what we do is when a tariff is put in place, we track the effect of those tariffs over a 6, 7, 8, 9 month period, and you can see for that tariff how long it takes to reach a place where it's affected the price level, and that's it. So we're getting better at that, and our estimate is that it'll be sometime in the middle of the year, but I wouldn't look for great precision in that. But we'll be able to see whether things are moving in that direction. I think we'll be able to see.
Richard Escobedo.
Thanks, Chair Powell. I'm Richard Escobedo with CBS News. I want to look outside the U.S. about what's happening outside our shores and how it impacts the U.S. Canada's Prime Minister said last week that there's been a rupture in the global order, and I wonder how you're thinking about geopolitical risk as it relates to the U.S. economy.
So I can't comment on that speech or statement or anything like that. Geopolitical risk for us is, a lot of it is around energy, oil. And so far we haven't, for all the turmoil, oil prices have come down, as you know, and so we don't really see much. Longer than that, it's trade, and the trade, the economy, our economy has pulled through pretty well, you'd have to say, given the very significant changes in trade policy. The U.S. economy has pushed right through. Partly that is that the way that what was implemented was significantly less than what was announced at the beginning. In addition, other countries didn't retaliate, and in addition, a good part of it hasn't been passed through to consumers yet. It's being taken by companies that stand between the consumer and the exporter. So that's where that is.
Jennifer.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. With third quarter GDP growing at 4.4% and the fourth quarter expected to have a 5 handle on it as to what the Atlanta Fed is predicting, at a time when you had a government shutdown and we thought that was going to shave off some growth, you've also got the fiscal tailwinds you've talked about, big tax refunds coming, potential tariff dividend. How could you cut rates and not spur inflation in that environment?
Well, we didn't cut rates today, but it depends on how fast potential output is growing, right? I'm just asking in principle. I'm not saying this is what's happening, but there's growth and there's how fast the potential is growing, and at a time of high productivity growth, potential output is rising. So it really matters whether potential output is growing as fast as actual output, and it would matter over time. The numbers you cite were for quarters, and quarterly GDP is, you need to look at 12 months because quarterly GDP can be very lumpy. GDP was negative in the first quarter last year. So the overall, over the year, the numbers were nothing like that. It was more in the mid-2s for the year.
And how do you explain the divide right now between strong economic growth and the job market? Is it productivity that's filling the gap? And is productivity being driven by AI at this point?
So there has been, you're right, there has been a divide of solid growth, but what looked like a weakening labor market. And that can be explained by rising productivity. But I would say we do see signs of, certainly of the unemployment rate stabilizing. So it may be we're seeing the beginning of the resolution of those two things. Also, as you probably know, the lore is that when GDP and the labor market get into an argument, in the end, the labor market data is more reliable. GDP data is just very hard to collect and understand, but nonetheless, I think we may be seeing that tension resolving a little bit. Too soon to say with any confidence, though.
Matt Egan.
Matt Egan with CNN. Chair Powell, after today, you have 2 meetings left as Fed chair. You've obviously experienced a lot during your time as Fed chair, served under multiple presidents. I'm wondering what advice you have for whoever your successor might be.
Honestly, I'd say a couple of things. One is stay out of elected politics. Don't get pulled into elected politics. Don't do it. And that's another thing. Well, another is that, our window into democratic accountability is Congress. And it's not a passive burden for us to go to Congress and talk to people. It's an affirmative, regular obligation. If you want democratic legitimacy, you earn it by your interactions with our elected overseers. And so it's something you need to work hard at, and I have worked hard at it. So, and the last thing is, it's easy to criticize government institutions so many ways. I will tell whoever it is, you're about to meet the most qualified group of people you not only have ever worked with, you will ever work with. And when you meet Fed staff, and not everybody's perfect, but there isn't a better cadre of professionals more dedicated to the public well-being than work at the Fed.
Thanks for that answer. If I may follow up, as I'm sure you've noticed, gold and silver prices have experienced historic gains of late. And I'm wondering how much attention, if any, you pay to those moves and what message you may take from these significant price increases we've seen for precious metals.
Don't take much message macroeconomically. The argument can be made that we're losing credibility or something. It's simply not the case. If you look at where inflation expectations are, our credibility is right where it needs to be. So we look at those things. We don't get spun up over particular asset price changes, although we do monitor them, of course.
Nicole, for the last question.
Hi, Nicole Goodkind-Barron's. Some prominent critics have charged that the Fed's economic models are somewhat backward-looking, but should be more forward-looking, incorporating things like productivity increases from AI. How do you incorporate current and future developments into your analysis and decision-making, and do you have an answer to those critics?
Yeah, so by and large, those criticisms, as somebody on the inside, they just don't make sense, and I'll tell you why. Every FOMC participant writes down a forecast every quarter, right? The summary of economic projections, and that's the basis for how we think about the economy. So, and the other thing is, what an economic model can do is it can grind up all the data for the last number of years, 50 years, let's say, and it can identify what are the relationships between variables A, B, C, D, and all that kind of thing. And it can tell you if you change one of those variables, this is what should happen in the macroeconomy. That's just the way it works. However, the structure of the macroeconomy is constantly changing. For example, we hadn't had a pandemic in 100 years. It wasn't in the model. And we knew it from the very beginning. It was not in the model. A trade war of this scope, we'd never had that in 100 years. And so there's great uncertainty at different points. Another thing I'll say is, when it comes to, technological developments that raise potential output, some kind of technological revolution, like happened in the 90s here and like maybe happening now with AI. We're all over that. And, everyone studies those periods, and, we're very clear-eyed about the possibility that this higher productivity may persist, and also that it may not. We're not, no one's sitting here unaware of the possibility of higher productivity. We've been talking about it for 3 years. It long predates the current situation. It's been going on for 5 or 6 years. We've had productivity higher. We've been talking about it that whole time. So it's very much on our minds, and we are well aware that higher productivity means higher potential output, and it changes the way you think about potentially inflation, growth, labor market, and all those things. That's all in our models. I mean, if it's just a question of using better models, bring them on. Where are they? We'll take them. But I think, we certainly are in contact with anybody who does economic modeling, and we're always looking to do better at that. But that's how I think about that.
And just a quick follow-up. We've been talking a lot about tariffs and passing through, and we've been talking a lot about them for the past few months. The trade landscape is still in a constant state of flux. Announcements, threats, negotiations, they're all frequently changing. So I'm wondering how you actually track these, what data or channels are most critical to follow this in real time?
Trade?
Yeah, the impact of tariffs and how they're changing.
Yeah, I think our staff has done a really nice job on that, and they've kind of put it together in real time. So as I mentioned, a tariff gets put in place, you can pretty much track its effects on pricing and on everything. And so you build a model up from all of the tariffs. At the beginning, it was very much of a forecast. Now it's every cycle that goes by, it becomes more informed by actual data. And our forecasts were not far off. What changed was, as I think I said earlier, what was implemented was smaller than what was announced. In addition, we didn't see retaliation internationally, and I think people did generally expect that because we saw that in the past, and that really mattered too. And then the other thing is that pass-through didn't know how fast that was going to be to consumers, didn't know how much exporters would take, how much companies in the middle would take, and how much the consumer would take. And it turns out it's a lot of companies in the middle who, by the way, are pretty strongly committed to passing the rest of it through, which is one of the reasons why we need to keep our eye on inflation and not declare victory prematurely.
Thank you.
We're done?
We're done.
Okay. Thank you very much.
All right, guys. So that is the end of the FOMC press conference. Again, I'm not going to say I was right, but I told you guys neutral Powell today. I think especially considering the subpoena he's getting for the Federal Reserve building drama, it makes sense that Powell was neutral today. It makes sense. He's going to refuse to commit to a path. He's going to refuse to commit to a rate path and outlook. And I think that was pretty predictable ahead of this meeting. Again, I would call him neutral today. I don't think he really said anything super compelling or polarized to one side of the dual mandate in regards to labor or inflation. So we'll see what happens in between there. That's basically what Powell said. And yeah, let me know what you guys thought. Again, we did a poll here. 50% of people think neutral, 23% think dovish, 26% think hawkish. Let me know what you guys thought here. I thought it was pretty freaking neutral. I thought Powell was pretty neutral. I don't think it's a shock that he was neutral. I think it's pretty predictable that it was neutral. And yeah, let me know what you guys think. I'll give you guys a second. I'll check the chat. Yeah, we got Tesla earnings going live. Tesla, Meta, Microsoft, and IBM earnings going live after the closing bell today. So I'm really curious to see what we get today. Again, Meta, Microsoft, and Tesla. And again, let me know what you guys think. Again, Meta, Microsoft, and Tesla. IBM, I believe, as well. So. Again, let me know what you guys think here. I'm really curious to see what we get today. And yeah. Should be really interesting to see what we get. And yeah, stock market news going live now. Again, in about 40 minutes. All right, guys. So again, check what people said. Gold ripping. John, you think Apple earnings tomorrow? Again, bullish. Neutral, but seemed chatty. Neutral, he was nervous today. Yeah, I don't think he's going to go. It makes sense. I even said it when we were on the stream. It makes sense that he was neutral because, again, if you're Powell and you're getting subpoenaed for your comments on the Federal Reserve building, you know, again, beehives, you know, if no beehive, send it back. But his beehive or his comments on the Federal Reserve building, I'm just joking about the beehives. Now he's getting sued. He's getting a subpoena is what he's doing. If I'm Powell, I'm not saying much either. You know, people like to give Powell a lot of hate or whatever, but that's the reality. If I'm Powell, I probably would stick to the script today. I'm not going to really go too much in detail about anything else, especially like really subjective things, opinions on politics, opinions on, you know, all this different stuff. I'm just not going to go into that today if I'm Jerome Powell. And I, you know, again, you can't really say you would either. Again, we got Microsoft, Meta, Tesla earnings after the closing bell. And yeah, let's see what we get. Again, I'm ready. You guys ready for this? We got Tesla, Meta, Microsoft earnings going live. Gold is ripping. Yeah, I saw gold push up. Here's the NASDAQ. Here's gold. So there's the NASDAQ. There's gold. I'll put the music back up. And then again, we're waiting for 40 minutes until... We're waiting for 40 minutes or so. Jobs will continue to be an issue. Prepare for a pump. Powell was leveled. We're going to pass 7,000. Yeah, here's gold. Look at gold. Just still breaking all-time highs. Still pushing up at all-time highs. Again, Powell didn't comment on the price of gold, but man, kind of a crazy move. And yeah, again, I'm going to pivot. Listen, we're going to do our own dedicated Tesla, Meta, Microsoft stream here. So again, I appreciate the love. Y'all hit the subscribe button. We do this live every single day right here on YouTube. We don't sell a course, don't sell a service. Everything's free. Again, we're going to pivot to our Meta, Microsoft, Tesla earnings stream, and I'll see you guys over there. I appreciate the love. Thanks so much, guys. Again, let me know what you guys think today. If you want to continue with the stream. Do we get a recession? I don't know. I really don't know. We'll see. It's not looking like it right now, but the labor data over the last 6 months was weak. It's gotten better. And again, guys, Powell kind of reiterated what I said. I told you guys before Powell spoke, the labor market was bad 6 months ago. It's gotten better. Inflation was bad 6 months ago. It's gotten better 3 months ago. It's gotten better. And so we're seeing easing on both ends of that spectrum, so to speak. And Powell basically said the same thing. So, again, we'll see what we get. Again, I'm going to pivot to the Meta, Microsoft, Tesla stream. Again, as soon as I close this stream, it will bring you to the next one. Stick around. I'll see you guys over there. And yeah, see you guys over at the new stream.